I'm Ranjit Chettiarji. I'm a former Chief Executive Officer of the Asian Confederation of Credit Union. I have already presented 2 presentations in my YouTube. This is the 3rd one I dedicated for this sustainable credit union. Sustainable credit union is a crucial issue, for it has a different interpretation, different meaning, different understanding. Because as I explained, most of the Asian countries, savings and credit cooperative are regulated under the cooperative law. There's no any single provisions in the legislations mentioning about sustainability. Of course, sustainability, it's very clearly, we look at the end of the year how much net surplus you made in the cooperative, or how much you will able to pay back to the dividends. I have seen some of cooperatives, even if they have not making the profit, believe or not, they make a dividends. So it's practicing. I think this is a very good point for me to put the benchmark based on my experience. 24 countries in Asia. I have good opportunity traveling in various countries. So then I'm going to explain about sustainable credit union in Asia, or best practices for savings and credit cooperative. Currently, I am working as a Chief Technical Officer for ACU, but it's a particularly project which is a micro lead, which is a savings driven, it's greenfield, where I started to work in the January 2014. Now we are moving to 2015. Before my starting presentation, I also would like to wish every one of you a happy New Year. Let's start it. I would say size is not matter to me. Size in terms of the asset, in terms of the membership. It is a matter for me because some cooperatives are saying that we have 500,000 members. I said the $1 billion asset. But I would like to see the quality of the cooperative. What is the mission of the cooperative? How much they fulfill the mission statement, providing quality, sustainable financial services to the members. Let's look at our sustainability beyond our balance sheet. Balance sheet is a very simple, end of the year, end of the month, we look at our revenue and we look at expenses and see whether we have able to meet all these expenses and whether we are able to give a certain amount of the dividend. I think that's not mine. Let's start. What is the best practice, number of members for the cooperative? Today, some country has a cooperative, nearly 60,000 members, 100,000 members, 200,000. Some still cooperatives are managing with the 200 members. Whether is a sustainable. We agree, we are living and we are in the business, in the banking business. We are not the banks, we do the banking business, enabling members to provide sustainable financial services. So how possible 200 members to mobilize the savings which can provide a credit to the members? At the same time, nearly 100,000 members, 200,000 members. What is this meaning of having 200,000 members if you do not have a direct contact with the individual members? You are like a multinational corporations. We go to branches. Okay, one branch is here, another branch is 200 kilometers, another branch is 100 kilometers. I don't think that the cooperative is go back to the original, working together. Too small is not going to work at all. Too big also, our basement of the cooperative, it is a people. So there is a certain limit to bearing this. We need to look at about the productivity curve. So this is a very important part of looking for economic theories also while we are developing the institution. This is the productivity curve is showing that at a certain level we improve the productivity. After that, we need to increase our capital cost, fixed cost, in order to gain. I think that's happened. Looking for Korean's model average, when I look at the Korean's cooperative model, nearly 6 million members with that 100,000 members. You see, average is 6,000 members. But there are some cooperative which has nearly around 50-60,000 members, but I don't think in Korean has nearly 100,000, 200,000 members. No. I think that's the best way to look at it. Having a 100 member, I don't want to spell out that country name, so they will feel that they will be let downing and insulting and negligence. No, it's not that. To make a sustainable cooperative society, we need to have 3 minimum staff members. Yes, cooperative has a voluntarism. Voluntarism is limited today, need to limit to policy development and monitoring, not to day-to-day implementation. So in order to run and visible in the cooperative society, in the community, we need to have 3 staff. That's minimum. To have to minimum 3 staff, we need to bring the business of the volume. So based on my experience, number of members is 1,500 is a minimum requirement. At the same time, I can also go the maximum. Of course, you can, depends on that situation, area, geographical condition, but somehow, somewhere we need to keep the limit. Shall we agree 5,000 is the best? Having a 2 branch, 3 branch, having 100 branch is not that good business. Better to help each others. I think that's one condition. Let's go back to our market segmentation. Is another element to best practices. There are 3 kind of common bond for our cooperative society, savings and credit cooperative. Basically, wherever we know about common bond is a community-based, people who are living together, household. That is the most popular within the Asian country. Of course, there are some cooperative at the institutional basis based on their occupation, and there is another one is based on their occupation and association. But my focus is today, we are looking for community base where people live. I think this is a very important financial inclusion in the development agenda of the financial inclusion and cooperative, savings and credit cooperative. When we look at the historical perspective, when we are looking on, all the savings and credit cooperative started with the poor people. But once they are growing, they imitate most of the prominent banking institutions, their systems and proceedings. So then they have neglected most poorest community. So I believe that cooperative, if you are mission driven, organized, not the mission driven. Mission driven, we need to focus most poorest community. At least 20 to 30% of your membership should contain with the bottom line of the pyramid. So then you are good. This is a savings and credit cooperative is a meeting point for the community. Banking is a business, mobilizing savings and granting loans. So this is actually we are meeting point for the community. And the same way, the savings and credit cooperative will have opportunity most poorest people where they are encouraging. This is a very important part. Educating for them, creating positive and mobilizing. It's not collecting. It's a very important part in the second benchmark. I think savings and credit cooperative must focus most poorest community. But it's not exclusively homogeneous group. It's a heterogeneous group. But savings and credit cooperative can work within that each market segment. So if you are having a more poorest community people, that cooperative is helping for your sustainable community. I think that's a very important part of the beauty of the cooperative. The cooperative savings and credit cooperative become human development institutions. That's what poor people, everybody knows about savings important, but they cannot do the savings. Savings is not the money at all. How the people are managing their money. It is not, savings is not the leftover after this. Savings is the first driven. Okay, that's the future. If the savings and credit cooperative will able to inculcate that the values and cultures of the members to having their own safety fund. This is a very important part. When you go to the Maslow theory has a different hierarchy, and look at the safety. That is very important. Safety is not only for the social security. Safety is not only the civil. Safety also your economic safety. So if the savings and credit cooperative can encourage, persuade and providing guideline, helping to the members to having their own security fund at least 6 months of their income, monthly income. So their family is safe. They don't need to run to go to the emergency. That is, we need to look at our product and service development. I highlighted 2 points now, 3 points. Number 1 is that number of members in the cooperative society. Number 2, the focus on the market segment. And third is the sustainability. It's having the members to wealth creation. Fourth element I would like to have, if you are working with the most poorest community, it is difficult to work individual basis. Having a one office and asking all the members to come every day is not possible. We need to develop the system where we can go. It's called bear banking business. The poor people are living within 1 kilometer, 2 kilometers, 3 kilometers. So that's the way we need to divide our village and working area. Our field staff or our members, staff members must be able to go to the community and meeting the people and helping for them to. Not only this is a savings and credit cooperative that will encourage certain activity, economic activity and providing business opportunity, training, savings. So this all should be encouraged, organizing their own self-help group. Self-help. This is a very important 2 words. Self-help and mutual help. This is that if the individuals cannot do by themselves, having group, it's not a group, big group, 5 people, 6 people, 7 people come together, they will able to help each other. That's cooperative. But within the group, we are having a big organization. So this is also very important. I believe the savings and credit cooperative is the only sector today to help the most of the poor people. So that is why, since savings and credit cooperatives are not working on this, and all the financial institutions, either microfinance institution or NGO or formal banking, are coming to the field and really to help the people. But I don't believe the way they are not encouraging savings and credit. Let's move to now. Very important part. Another one is managing the credit union. This is our area. Managing the credit union is, we have 2 sectors. One is volunteer, the directors, board of directors. Another one is the general manager and his staff. These are 2 teams, but work as one team. I think this is a very important part in the cooperative regulations, bylaws. Certainly has given the descriptions about the responsibility, duty and accountability for the board, and it also said, okay, management. However, in implementation, we are mix each other. Most of the Asian savings and credit cooperative president will look like the general manager. He want to be the general manager. He want to do everything by himself rather. This is creating the conflict of interest. I think that's a very important part, to giving job descriptions to the board of directors. And this is, you are responsible for preparing the policy and monitoring. And when it's come to the management, also should be knowledgeable and experienced to developing their business plan and get approval. And I think there should be a very clear demarcations on this. I think the critical part in the sustainable of the savings and credit cooperative, I have seen various savings and credit cooperative in Asia. This is the biggest issue: human resource management. Board of directors, they do by themselves. There's no proper. Asian Confederation of Credit Union has developed the material for directors competency program, supervisors competency program, managers competency program, and another one is called that. Which one is the loan officers competency program. I think this is a professionalism is a one key issue for sustainability. The board of directors must aware what is the business today. We cannot learning by doing. It's not anymore available. The board of directors should get trained to take appropriate policy decisions. They have to look all the time the vision statement, and they have to develop the policies and the program based on this vision statement. I think that is a very key element about the sustainable. But having a savings and credit cooperative is small country, and each cooperative, they have a difficult to managing their own people. They have a difficult to hiring the people. That is the reason our federation, that we call apex body of the savings and credit cooperative, is helping to the members' business. That is called human resource management policy. It should be part of our national federation, creating the better human resource management policy. Not only that, it's a recruitment process, training process. It's not the individual, each cooperative can decide who should hire, who should fire, no. I think there should be a more strong, sustainable program for the human resource management. Without human resource management element, it's not possible to have a sustainability. So we need to deviate it or demarcate it. What's the role of the board of directors? What is the role of the management? That's not only that. Monthly monitoring system. I think that most of the Asian savings and credit cooperatives are aware the PEARLS monitoring system. Now PEARLS has a different version for each country. Particularly the Philippines has a Cooperative, Sri Lanka has it, I think, rupees, and Nepal has Himalaya pearls, and Bangladesh gold pearls. So but the source is the pearls. There are few indicators are very essential to sustainability of the cooperative. Most of the savings and credit cooperative, my experience, the board of directors are not, how do I call it, encouraging and asking to the management to prepare the pearls. Not only that, the board of directors are not monthly. They have several thousand reasons to say, oh, we are far, we are small, we don't have as manpower to do that. But we have 1,000 reasons we need to do that pearls. Without pearls analysis or monthly performance evaluation, monthly performance review of the organization, the board of directors, there's no point to have a board meeting. It's my request. If you're a board member, if you're a manager, if you are not doing the pearls, if you are not reading the pearls. So it doesn't matter for me what you are doing. You are not doing anything for the sustainable. So if you are conscious sustainability, if you are serious on this cooperative for starting from 2015, your first responsibility as a manager to prepare monthly pearls reports. Whatever the word called. Whether it's called pearls or cooperatives or cooperations, whatever you word, but it has to be done within 7 days. You need to look at it, and then you will know that how you are strong and weak. And the board of directors must review performance of this. What we can see in this performance report? Risk area. Now you can see what is the portfolio at risk. Now you can see whether how much provisions you have made it. You can see the financial structure. I am not going to explain, maybe I will come up with the next my presentation about the financial performance. So you can see whether your health condition, how much the savings proportionate against the total asset, how much the loan proportionate against your asset. Most important, how much your non-earning asset, how much your delinquency, and very, very important, what is that? Net institutional capital. You can look at the net institutional capital. Looking for net institutional capital, E9, you can tell how you're strong. Having 100,000 members, having a 400,000, nothing. If your net institutional capital could not make it a 10% for your organization, what is the use of having 100,000 members? You are putting the risk for the people's money. I think that's very important. This is a benchmark, best practices. The must prepare the performance review, and then I think this is the very important part. I am going to tell you the part of the best practices based on my experience. Loan management. I think there is no regulation, rules in India. We are human beings. We are selfish, no matter what you are explaining. But you get a responsibility managing the peoples. We are not professional trained people. So how to avoid the risk? I think this is my next suggestion. Having a dual control about the loan portfolio. Of course, the larger cooperative society, now we are going to say proud, we are offering 100,000, 200,000, some cooperatives say we are offering 1 million. So you know that stories, what has happened in the last years, last 2-3 years. In fact, I am also victim of this type of loan management. I believe this is a part of the Asian Confederation of Credit Union. Next, our strategies. Federated system, integrated system. We need to agree above certain level. Of course, if you are having a smaller loan, definitely we have a delegations. We give to that loan officers, managers, some loans we give to that board of directors. But if it's a large loan, I think we need to have a professional management from our federations. So federation need to approve large loan. I think because we are not day-to-day, our cooperative society are regulated and supervised by either our federations or either the cooperative governments. They come and do the end of the year doing the auditing. Auditing is nothing, not enough. Auditing is going to be a post-mortem and saying what has happened, how it's happened, that's not the issue. I think this is a very important part. A loan portfolio management should monitor by the federation. This is my another suggestion. If you have not done it yet, I think this is a very important. The federations need to come agree. This is not the federation going to decide by themselves. Federation need to bring these critical issues of the cooperative. I don't want to say mismanagement. I don't want to say nepotism. It's happening. It's happening. So then, in order to protect our members' deposit, in order to protect the members' savings, we need to agree, we need to monitor. Second, organization. Let's move to next level. We has to do the marketing. No matter, the cooperative need to marketing and product development. But currently, most of the savings and credit cooperative marketing and product development is done by each primary cooperatives, which is very costly, which is risky. I have seen some of cooperative in my eyes. They have developed a savings product, saying that this is a pension savings program. This is doubling the deposit program within 5 years, and when I do certain computation and it's lost, I think this need to have a certain monitoring and supervision part by the federations. I think this is what Miss Lenny Sanroke has already explained, and she has put into the black and white. So ACU with all the members are going forward, a federated or integrated system. I think that's one of the most element. All this product development, savings and product development is not allowed by any individuals. I think National Federation developing all type of savings and credit product from children savings, youth, adults, various times. At the same time, our lifestyles, economic scales, and we can develop the various type of savings and loan product. Then we can give to each primary cooperative based on their asset size, based on the member needs. They can apply, okay, minimum each primary cooperative 5 savings product, 5 loan product. I think that's also a very important part. Once you organize, early stage is not possible to do. Within 3 years, this savings and credit cooperative able to develop at least 5 to 6 savings product and loan product. The marketing, no any individual marketing. Individual primary cooperative. We need to come up with the corporate marketing system. It's a very important part. Let's go to the sustainability is another big picture. I am not talking sustainability of one primary cooperative society. You might be big cooperative, you might be very large cooperative, you feel very proud about having a large 100,000 and 500,000 members. But be aware, smaller cooperative, once they are not sustainable, how do you say that you are sustainable? This is very important. Therefore, we need to have a strategic directions of our whole cooperative. That is why National Federation need to launch stabilization fund. It's quite difficult people to understand when I say stabilization. Oh, it's an insurance. No. This is kind of assurance program, kind of guarantee program, kind of call it coverage, but it's not insurance at all. It is working together, protecting each other, locking their hand each other. Block. Not allowed to one cooperative to go down. But this is not going to be a voluntary basis anymore. This is a compulsory. As long as you are registered under the savings and credit cooperative, you are in the business of the savings and credit business, that is, you must participate in stabilization. Stabilization fund has a two side. One side is to say the safety and protection. Another side is a very strong direct supervision and monitoring. How it's going to work? It's simple. Because we believe that without supervision, monitoring, no any institution can sustain them. So monitoring and supervision is done by one side of stabilization fund and looking strictly, and there are various type of off-site supervision, on-site supervision, and they go and look it and their financial performance and analysis they are doing, and then do the risk assessment. Based on a risk basis, we call risk-based supervision will be applied and managing. Based on that, they will able to charge the fee. The fee is going to be like a word, I don't want to say a premium word, it kind of contribution to protect. This is like a whole movement. General Reserve Fund. You are now look at that your own cooperative society. It's called technically institutional capital, or we can call it General Reserve Fund. In addition to that, whole movement have another on top of that reserve fund. In case one primary cooperative, if you are going for the balance sheet insolvency. What does it mean in balance sheet insolvency? That means you are not able to gain profit or income to meet your operational cost. So we call, okay, deficit, running a deficit, or we can call balance sheet insolvency. If you are happening in the 1 year, 2 years, so now where are you going to cover? So now you have a first defense is your institutional capital. But we don't need to use your institutional capital, but because our general reserve fund, which is called stabilization fund, will help to overcome. Not only just giving the money, we will look at what is the causes, cause and effect. We need to agree that what decision make that net losses. What was the product which is not going to make a profit? What is the staff member who is not making the profit? I think we go a little bit more analysis part and helping you to find. That stabilization fund will help you to find. But in the case of that, the board of directors are not going to agree to follow our prescription, then is conflict is right. We need to go beyond that now. That is stabilization fund should have a power to come and sit in your board and should have a power even to suspend some of your board members who are not going to follow, who are not going to willing, or if your board chairman are not going to agree, we should have able to power to call with the participation of the cooperative regulation department to call the general meeting and to show our members what is the weakness of this organization. This is another element of the best practices. I will go to another 3 areas before I conclude. I said this is savings and credit cooperative should not just looking for their own sustainability. We have to look for services to the members. When we looking for the marketing our cooperative, we should not going to compete with the financial aspect only for interest element. If the savings and credit cooperative are going to market saying that we are highest financial services, if you are going with the highest interest for the deposit, if you are getting the lowest interest for deposit, then you will have a problem. We need to agree that when you look at the financial market, the savings and credit cooperative, not even a career, it's not a 10% of the whole financial market. You cannot create your own market price. The secret is not the price, services. I think that's very important. The savings and credit cooperative need to agree. We should not compete each cooperative society based on interest. When you look at our product are same, and we look at our office, even though we are different cooperatives, signboard are same. When you look at our cooperative, the layout are same, but services, our staff are trained to more customer care. We stand for our members. We are here to help our members. Members is our main vision, how we can help them. If you're going to follow this, providing additional welfare services, welfare should be able to link with your product. The most of our savings and credit cooperative has a various welfare products, but that welfare product and your prime business has no link. So this is not going to happen. Take example, one savings and credit cooperative society is providing medical benefit to the members. Let's put it, these medical benefits or paying for hotel bills for the members once you get sick, it is valid or eligible as long as members are paying their loan on time. as long as members are depositing compulsory at least monthly share, small element, around maybe $1 or less than that, or maybe $1 saving. This is a must combine. Savings and credit cooperative must able to introduce the best practices. Member must come, or we should go to the cooperative. At least a monthly small amount share, little bit amount per se, depends on their capacity. But it's not going to ask everybody $10, $5, $20, no. It's even in the law, we are talking about 50 cents. I am sure this is the best practices. So then, this is a link with the welfare. Of course, this is a very important part. Our welfare, whenever we are having a certain provisions, we make it for the welfare members, the health, funeral benefit, wedding, social activities and welfare. Please, I do agree that the savings and credit cooperative is not purely only financial business. It needs to help for the members' social welfare. But it should not be separate. But if the members are not depositing monthly, at least is not coming and putting the share only to 10 cents, what is the meaning of giving the welfare? So this has to be linked together. So then our welfare is a support services to the good standing members, not for all the members. This is a very important part of this. Another elements I would like to highlight it, and these are the very important part. When the savings and credit cooperative, when we are putting for our activity, every type of the community involved, children, women, youth, adults, I think that's a very important. And maybe they can create it a small association inside, because of course savings and credit cooperative, when you are organized, it has a heterogeneous, but it's like a banyan tree. So they have a youth club, children club, women club, the elder citizen club. So then but credit union is like a main engine. Let facilitate other activities too. I think this is very important. Another one is a triple bottom line. This is very important. Savings and credit cooperative has to look at, okay, social and economic environment sustainability is very important we talk about, and environment sustainability. I think this is a very important, another one, savings and credit cooperative, to build the awareness of the development issues, pollution, soil, weather. So this is activity, even our every single activity, we need to be very conscious about our development activity. I believe that what I have highlighted, sustainability, it is not just looking savings and credit cooperative as a financial institution. I look the sustainability benchmark for community level. The people are protecting this institution. The savings and credit cooperative is the best development institution. It is a human development organization. I think all this benchmark you may not able to put in practice at one time. But once you start, rather saying you want to be the biggest savings and credit cooperative, you want to be strongest, yes, I think that's the word. Rather saying the biggest cooperative, I am the strongest cooperative society of our community. Without at least 30% of your penetration in your community, you are not strong cooperative. Your root has not gone to the grave. So I believe this, my presentation, will enlightening for you, and then you will able to prepare the plan. It's not going to happen within overnight. Every single cooperative society must prepare strategic plan. This is the plan for the roadmap. The roadmap will explain this all. So without roadmap, you are just day by day working. So with that, I want to say thank you very much for listening, and wait for my next presentation. I will come back to you. So happy New Year to everyone. Thank you very much.